There's not an asset in the world, it looks like to me, that hasn't gone up.
That kind of paints a not so good outlook in the sense of how do we get this economy really juiced and back to where it was?
If you want to boost consumption, you have to get money to people with a high propensity to consume.
There's a lot of reports coming out now about the kind of recovery measures widened the gap, the kind of, equity or income gap, or, kind of widens the divide even greater. Certainly, I think that's some of what we're seeing here. If you got, people that are still employed, obviously have been affected by COVID, but aren't as down and out as millions of other Americans. They can take these monies they're either getting checks or they're getting PPP money or they're getting other kind of recovery funds, and they're stashing it away, which I think is why we're not seeing inflation, even though we're seeing huge fiscal spending, huge QE, which we can get to, but you're not seeing the velocity. And to your point, you need the money to be spent in the economy, not just going and being put into some form of saving. And I guess that's the thing I'm seeing is it might not be inflation, but is there such a thing called asset price inflation? Because I feel like we're seeing asset price inflation. It might not be true inflation, but are we seeing asset price inflation?
Yeah, I mean, it certainly seems like it, right? There's not an asset in the world, it looks like to me, that hasn't gone up, call it the past 6 months to a year, right? So that kind of tells you where, a lot of that money is ending up, right? A good bit of it is ending up in the housing market. And we've seen really robust home price growth. There are other issues in the housing market, like lack of inventory and, of course, really low interest rates. But I think some of these $2 trillion, maybe people are using it to pay bigger down payments, which is something that we've seen in our data at LendingTree. Certainly some of it, I guess, is ending up in the stock market. And then some of it is ending up in these new crypto and digital markets with, cryptocurrencies and now the NFTs, which, I'm one person who's glad to say that there's stuff in this world that I just don't understand, and that stuff I just don't understand. Certainly there seems to be some asset inflation.
I'm seeing it in my world. I'm screen sharing here. I've got the European angel and seed pre-money valuations, and the chart. I mean, it just goes. I mean, it's just going up. I mean, it's been going up, but we're seeing it in my world with these mid to high growth kind of growth stage tech startups towards second half of last year. We published a report showing that all your mid to later stage startups, all the money was flocking to those and their valuations were exploding. Yeah. Now, I think you're actually seeing it trickle down even further. Now in the VC community, they're talking about how kind of later stage VC funds are looking to write earlier, like seed or Series A stage checks, because the valuations have become so expensive for the mid to late stage. Now that money is now inflating the earlier stage value. So, in this chart's Europe, we did our report on kind of US startups. So you're seeing it certainly in US and European markets, in even these more illiquid, investment vehicles like VC funds. Private equity money is private equity is awash in money. The housing market you're talking about. So, bringing it full circle, if we have asset price inflation, and if we have the the mechanisms to kind of arbitrarily spur growth, fiscal spending and QE, let's call it, but that money isn't hitting the velocity. So it's not actually creating increased GDP, right? Or for every dollar you spend, you get back less than $1, maybe way less than $1 of derivative kind of GDP spend. Going back to your point on kind of when are we gonna when is GDP going to actually reach kind of like 2019 levels? That kind of paints a not so good outlook in the sense of how do we get this economy really juiced and back to where it was? And if our institutions have diluted their ability to kind of accelerate that timeline, that's kind of unfortunate. Or do you see it differently?
No, I mean, I think probably part of what it is, where's the money going, right? So it's going to people who don't need to use it for consumption, so therefore they use it for asset purchases, right? Which is creating, maybe some froth in the asset markets. So, if you want to boost GDP, which is, one part of gross domestic product, the other way to measure it is, a big part of it is consumption. If you want to boost consumption, you have to get money to people with a high propensity to consume, which probably means those are people who do not have assets that they hold on to because they use most of their income as consumption. So, it's really a question of are you designing these stimulus or these monetary policies in a way that funnels the money towards the people who are likely to consume? And it's not an easy problem to solve, right? Which is kind of why if you look at, some of the policies, like the Fed, right, has a hammer, so everything is a nail. And the only thing they can do is kind of pump money into it, right? And part of the challenge, the Fed is trying to figure this out, right? What they're doing now is they're saying that, one of the reasons there's this big inflation debate is that the Fed is now saying that, the 2% is not an inflation ceiling, it's an inflation average. So they're happy to see inflation run ahead of that level. And what the Fed is also doing is that they're putting more emphasis on the other part of the dual mandate, which is full employment. And they're now saying that full employment is not on the aggregate employment statistics, but it's on the employment statistics of vulnerable groups or previously disadvantaged groups like Black unemployment, right? Which is why the Fed is saying we can let inflation run a little bit hotter so that we can improve this metric of people who probably have a higher propensity to spend. The challenge is the way they do that is by more monetary stimulus, which ends up increasing the assets or the wealth of the asset holders, right? So yeah, it's not an easy problem to solve. Probably the fiscal side is better equipped to solve this than the monetary side. And then that gets into the questions of inequality and tax policy and, some of those more complex issues, which then turns into a kind of left-right type of debate.
Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.